Alibaba surged 15% today, and JP Morgan sees buying opportunities in Alibaba and other Chinese stocks, and they cite three important reasons. However, are the risks off, or is this still a bit of a hazardous environment? That's what I'm going to cover in this video, so smash that like button and subscribe if you're new. You're watching More Money, let's get it. What's up, guys, and welcome back to the channel, where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into it. So you can see here that Alibaba is actually up 15% today, or almost 15%. However, the one thing that I do want to note is that since about the time that I put out that double down video where I actually doubled down on Alibaba, you can see that the shares have actually increased up about 41%. Now, that's not to say that I called the bottom or knew that that was going to happen. That just goes to show that sometimes with investing, you just get lucky. And that's really what happened to me here. I just got lucky. However, what actually caused the shares to surge 15% today? Well, you can see here that they really jumped because there was a wave of video game approvals from regulators in China, which has kind of like boosted the sentiment in the sector. So China's gaming regulator greenlit the publishing licenses for 60 games. And what that really is a sign of easing regulatory pressures for gaming stocks in particular and the tech sector at large. Now, here's the bigger issue. One of the reasons why I was a little bit scared of buying into Tencent is because the government is cracking down on the amount of games that the youth can play or the times that they're allowed to play. And so the gaming sector is just one of those areas which is really in the eye of the regulators. So if they're loosening up on the gaming sector, then that really is an indication that they're going to be loosening up on all other sectors. And I really like Alibaba because they're sort of outside all of that. Their biggest investment and the direction that they're driving the company's growth is in cloud and grocery. And cloud, the government really shouldn't get in the way, and they're really not so far. I mean, they did get in the way with respect to data security as it relates to government entities, but they haven't gotten in the way as it relates to private entities. So I don't think they're going to be getting in the way of cloud. They're definitely not getting in the way of grocery. And you can see here that I did put a note that China stocks will jump on anything right now. And you can see Alibaba's up 15%, NIO was up, JD.com was up, and even Tencent was up. And I would think that Tencent would be up more. However, I just don't think Tencent went down as much as Alibaba has, which is why it didn't come back up as much. I think Alibaba was the one that got beat up the most. Now, moving on from that, one of the things that's causing a little bit of more of a bullish sentiment for Alibaba is JP Morgan cites buying opportunities in Alibaba and other Chinese stocks. And what they're saying is that they see three important reasons. The one is an ease in lockdowns. The second reason is continued growth support measures. And effectively what that is post-lockdown growth support measures. So that was like that coupon stuff that I was talking about in my earlier videos. And then the third reason is the possible relaxation of the regulatory crackdown. Now, these are all good catalysts. But what I will mention is that there are risks that still exist in this economy. The first one is slowing global economies. Look, if the world is slowing down, China's going to have fewer people to produce goods for. So with rising rates comes trouble for China. The second risk that exists here is that the Chinese real estate market is still in a crisis. And the third risk that I do want to point out is that there could at any time be further zero COVID related lockdowns. They have never stepped away from that zero COVID philosophy. They've just eased lockdowns, and you can easily see that come back if there's a surge. So guys, be careful and embrace diversification like I always recommend. Look, I'm not going to tell you what to do with your portfolios, but I am a huge proponent of diversification myself. And you guys might be wondering, when I put out the double down video, the $100 cash secured puts for the January 19, 2024 Alibaba puts were trading at around $30 per share. So you could sell these at $30 per share. And so what that effectively gave you was the ability to buy Alibaba at a net purchase price of $70 per share if the shares were trading under $100 by January 19, 2024. So that was a really low risk way for me to double down and just generate a little bit of earnings here. And so you can see if you had sold them at $30 per share and you repurchased them to close today, you would have made 40% so far. But I'm just going to be holding them to close, so I'm hoping to generate the full $30 per share of premium. But the one thing that I do want to mention is that Alibaba is no longer the cheapest opportunity in the tracker that the Patreons get access to. So you can see here that Alibaba has now risen a little bit. It's trading at around 40% of what I believe its intrinsic value is. So it's still the second cheapest opportunity, even at $120 per share. And I think a lot of you guys can agree that at $120 per share, Alibaba still is pretty cheap. But there's one additional opportunity that's trading at under 30% of its intrinsic value. And so that's a name that I do personally own in my portfolio. And you can get access to all of those names in the tracker at the low tier of the Patreon. And so, like I always say, there's never any risk to you, because if you decide to join the Patreon and you decide that it's not for you, just message me in the app, let me know that it's not for you, and I'll fully refund your first month subscription. So once again, zero risk to you. Now, if you guys haven't seen it, I actually put out a deep dive in Alibaba's recently quarterly results, and you can get to the latest video on those quarterly results right here.